All right, happy Fed Day, everybody. It is Wednesday, June 12th, 2024, here at PreciseAlgorithmTrading.com. And the Fed left rates unchanged and signaled that they're only going to possibly cut one time left this year instead of two or three times like they originally said. And at least that's the news I heard. And none of it really matters, at least not the way we trade. So, I mean, it does move the markets, but that's the only reason it matters. So, and we knew that coming in. So, let's start here with the automated trading systems and the new and improved automated trading systems. This is the Dow, and it didn't do anything today, which is just fine with me. We had a nice trade yesterday. I was kind of surprised it didn't move. The Russell, which I'm going to work on this weekend to make it look more like this. Um, Basically eliminate these down trades. And it made money yesterday and lost money today, and I'm going to get these stop outs to be a lot less painful. That's the plan. The NASDAQ is the good story because we put in new equity peak today. That's that green dot right there before it gave a little bit back. So the trades for today, did I get the right one here? Yeah, I did. Um, that was right out of the gate this morning. This is Chicago time, so it's not Eastern Standard. Right out of the gate, we got a nice trade, and then we gave some back. And these are the type of stop outs I'm talking about, not necessarily this one. You're going to have that every now and then, but yeah, that's you get a series of those, and then you get a pop, and you get a series of those, and you get a pop, and that's what we're shooting for. And let's see, I want to compare that to the old one, and it's climbing too, and that's expected. This is actually still a good equity curve. It just has this giant dip in it that I have effectively, I think, eliminated. So, and it is interesting that it had this big pop yesterday that, and now the other system had it today. So that's all well and good. Let's flip here to these charts, and I'm going to a little change up on you just to, I think it clarifies some things. So um, I went ahead and put in long-term trend lines, and these will have signals. So this is a 50 and a 100 period exponential moving average. This is an old system, and I decided it would work well with what we're already working with. So what I've done here is eliminated all the lines except for the Keltner channels that go with the Simple 30 system. And I still have the bars turning green when they turn green, and I still got them turning red when they turn red. And so the bar color is the Simple 30, and the long-term trend is shown basically as these two moving averages. And you can see that if you're in, I'm going to say ignore the white arrows. What they are really confirmation candle or confirmation arrows. Um, I could turn them off, but I really kind of want to see them. And anyways, all the same signals can apply here. The big thing is that I think we can stay in a trend longer, and we can be a little less worried about setting a stop because we can set our stop a little ways away, give ourselves plenty of room. I'm probably going to use the cloud, the bottom of the cloud, which is what this is. Use that for the majority, and sometimes just the Keltner channels. But as long as these two moving averages are trending higher, man, there's no reason that really other than taking profits that you should be afraid for anything, and you can just stay in a trend longer. Now, this is the way I want to look at this. By the way, I don't know if you know that this is a thing, but if you right click, you can go maximize sell, and then we can just concentrate on the daily chart. And that goes for any stock. Check this out. It's fun. So here's a stock that's been sideways. That's not great, but it is bullish here. And if we would take off, I don't have a good example in the history. There's one. If we'd take off properly, it would really go up, and it could really go up. So this is the point. So now we're back over here, and if it takes off, great. Here's the other thing: is if it turns down, just get out. And there's this. All right, this second indicator that's an old standby actually is this on balance volume, and this is my take on it. But on balance volume is actually a simple. I'm going to go ahead and show it. Math problem. That's the total sum of the sine of close minus close yesterday, or the one bar back, times the volume. So you're actually comparing the closing price to volume. And then I went ahead and added a moving average to it. The moving average is so I can tell when it turns up, and it colors when it turns up. Not to mention, on balance volume will go above the moving average, and you can see when it's climbing. And so you not only when you want to be in a trend, we'll go back to ES. Do you want it to be, the 50 being over the 100, but you want on balance volume climbing, and it's not an easy indicator by itself to tell when it's climbing because it has these bubbles in it. But if you make a moving average of it, you sure can. So, and you can actually see this was climbing this whole way until you got a break in it, which happened to be followed by a red candle, and the true momentum indicator went with it, and that would have been a great time to collect and protect your profits, even though they stayed apart from each other and then they rose after that. I think this is a great way to look at one chart. You get a good feel for long term, short term, and intermediate term all in the same kind of a look. At least I do. So, and this works for everything with volume. Now we're going to run into some things that don't have volume, and frankly I don't trade a lot of those. But here's Apple. So you could trade literally off of the signals of when, well, this is the actual break higher, and you also got to be careful when it breaks higher and you get the signal. Most times it pulls back to some extent, which it happened to be on the day of the break on that one before it takes off, and it literally from there it went from 185 to 213 in a few bars. Now it's not always going to do that. I showed you the example of AAT. It's not doing that. But if it gets up and gets out of its own way, and by the way, the wave structure still works, so that's why I probably ought to be moving my stop back to here, but sticking my stop underneath a pivot still works. Hope that makes sense. Let's look at, so the S&P went up 45 points today. And this is one of those situations where you can't see volume because the S&P doesn't have volume. The futures do, so we'll use that. The Dow went down 35 points today, and it was a noisy 35 points. I'm going to get rid of this drawing. And let's look. So the Dow actually does have volume to it, so, and we do have rising volume. However, it's red bars. Let's it's not exactly convincing. If you get below the Keltner and you want to take a risk, then sure, you could do that. And you can also flip it back to here where we're looking at 2 time frames, and you could trade from the 1 hour or the 4 hour time frame depending on what you're into. I've also got a proxy. It's not even a proxy. This is actually the moving averages being transposed from the daily to the 1 hour. So that way you get to see exactly what's happening. And again, you can watch market structure and breaks of structure and so forth off of the hourly chart. Or I went ahead and put it over here on the 4 hour where we could. Oh, that's interesting, isn't it? It's not showing on balance volume there. So it's not exactly perfect yet, but it is something I'm working on. All right, stay tuned. So that's the 1 hour. I'm going to go ahead and put this back like that. And I hope everybody gets that as long as the 50 is above the 100 here, the odds are that the overall trend will persist unless it turns down, and then you've got a clear signal to be out of that market. All right, the Russell today also doesn't have volume, so let's go up here to the RTY, and you can see it's chopping around with the volume, and again, we're kind of in the middle of no man's land, whether this thing's going to take off to the upside or if it's going to fail and go to the downside. For that, we're going to use our momentum, and we're also going to use signals and on balance volume to kind of get a feel for all that. But I'm also not in this trade. If I was in IWM, which I was looking at, obviously, we have gone from red to gray, so there's a chance. And if we flip back to here, yeah, it's actually taken off to the upside. You can also start to see on balance volume trending higher on the hourly chart before it hits the daily. I'm going to flip this to 4 hours because it does show it like that. So, okay. That's the Russell. The NASDAQ is now well beyond the 1618, and I'm going to get rid of those because they don't do me any good. That's interesting, isn't it? Let's go up here to the futures where we get our on balance volume. And you guys can see this, especially with the NASDAQ, those two moving averages haven't crossed to the downside. They haven't been the other direction except for this giant correction. In fact, that giant correction went all the way from February of 22 until February of 23. That's a whole year. And if you, this isn't my personality, but if you, let's act like you bought a long-term put right here, you could ride it all the way down from, in this case, 14,833 to where price was at the end of that, somewhere around 12,200. Or 12,400. Yeah. So hopefully that makes sense, and maybe that'll give you a little bit of an idea on how you could hold on to a trend. So what else we got? That's the NASDAQ. And by the way, another thing, You can trade this if you put an hourly chart on here. That's the wrong one to look at. If we maximize this one, say, you could trade this the same basic way. Buy signal, wait for a little bit of a pullback, or one of these giant pullbacks, and then you could actually ride it up from there, as long as that trend stays, because that's an impulse wave, and you're looking for a secondary impulse wave after usually the primary one. Alright, and then that just happens to be an inverse ETF, so it's maybe not a great example, but, and let's look at oil. Same thing. Maximize sell. And so oil had a recent breakout and that impulse wave higher, and now it's really had this pullback that we've been talking about with that wedge pattern. And on balance volume has not been trending higher. And now we're going to be waiting for it to pick up. And if it does, I am going to be long oil. And right now I'm waiting for prices to come down out of this on the hourly chart over here and give me basically an entry, which looks like we're getting ready to have one to the upside on the hourly chart, going from the further crossover there. Gold, GLD, same thing. It's been going higher, it's been trending higher, and it started to break out in this kind of a thing. This is like if you were long going into this and you started to get this kind of chop, this would be a place to get out. And again, you can use the momentum indicator at the bottom. So bonds, TLT. It's actually in a downtrend, and again, I have the simple 30 on here to color, so you can see that the shorter term trend is actually up. You can also see the on balance volume is up, and the trend on the hourly for on balance volume is up. So the question is going to be, are we going to get a crossover at some point that we can play? And to just give a couple of examples, like BG recently had a breakout and all this chop, and now I'm just waiting to see, and on balance volume is going higher, and basically when we get a decent enough, well actually I'm already in this, so you know, the big question is, are we going to start breaking the new highs? Coinbase has been in an uptrend for a while, had a giant dip and a giant rise. So anyways, it could be a really lucrative idea, and I think it brings a lot of things together. So alright, I'm going to go to the bullish percent indexes and wrap this thing up. So we'll start with the industrials like we always do. Didn't move. The SPX. I went out of order. Sorry about that. The NYA. Sorry. Went up 4.35%. The transports didn't move. The NASDAQ up 3.09%. The S&P up 5.78%. The S&P 100 up 1.67%, and the NASDAQ 100 tacked on a new green X today and went up 8.5%. So the fact that the big bullish percent index for the NYA rolled over the other day could just have been. We'll see. It's going to need to roll back up again for everything to really take off. And I think in the meantime, we could be. Well, I know the Dow is going to be the one that needs the work. So the YM here needs to get up and going. So we'll keep an eye on that. And we'll talk to you again next time. Take care and have a great night.